What's going on, guys? Mike here, and today's another exciting day for the Wealthsimple portfolio update. But before we get into that, I do want to highlight a video that I released earlier this week, which is the very first video or episode, if you want to call it that, on the DIY investing basics. This is primarily meant for like beginners, but there was one highlight in there that I just want to make sure I share in this video because I fear that there's probably some people that won't check out the beginners or the basic videos. But I just feel it's super important for everyone to understand. And this is the table I'm going to share in this video from the other video I made earlier this week. And that is the based on the stock market from 1926 to 2021 and shows based on over time. So, going from one day all the way down to 20 years. And it indicates the probability of having a positive or a negative return. So you can see a significant difference from like a 1 day to 20 years. And so I just kind of wanted to stress that in this video that I'm a long-term investor. I assume most of you are as well. But if you didn't have this information on like what time does based when you're in the market, I feel like this is super important to understand. So time, and this is the thing that everyone always says, time in the market beats timing the market, right? So get your money into the market, be invested, for the long term, and it will pay off for you in the long run. So I just wanted to share that with you. I hope you guys find that helpful. Definitely leave a comment below if you didn't have that realization before. I'm kind of curious on how many people maybe didn't realize that. So without further ado, let's just get right to it. Check out the updates to this Wealthsimple portfolio. So we did have some dividends this week that from RioCan, which is my real estate REIT, VDY, which is my Canada Index ETF, and we also got some from TSA, which is my high interest savings ETF. If you don't know what that is, definitely check out this video. I say it in every week. I just love it. It's where I keep my cash, and you can at least get some interest out of it. So we did reinvest those dividends into XEQT and ZAG. For those of you, again, XEQT is my global diversified fund where I have the bulk of my investments, and ZAG being my bond allocation. So, and just so you know, the next video in the DIY investor series is about bonds. So, and they'll be explaining the differences between individual bonds and bond funds. So definitely check it out when I release it there. So just kind of moving on, the portfolio between my RSP and my TFSA did exceed $28,000 this week, which is kind of exciting. So it came in at $28,150, which is, like I said, pretty cool. It's always exciting to kind of go through those new thresholds. So that the next big one would be 30,000. So we'll have to wait for that. But so just kind of going over the year to date on between the TFSA and the RSP. You can see here, we did kind of shoot up a bit. We're at 5.4% for year to date with $322 in dividends received. So that's pretty exciting. You can see here, obviously, tech and my asset management being my two biggest gainers this year, which is pretty awesome. And obviously financials being my weakest, which reminds me, I did create a YouTube short this week based on the importance of diversification, and I just want to highlight it here. Again, if you're a new investor, you gotta make sure that you're diversified. My rule of thumb, like I've mentioned before, is no more than 5% of any single stock and no more than 20% in any single sector. So you can see here, if I was loaded up completely on financials, I'd probably be having a bad year. And again, I just kind of want to talk a little bit more about VDY because they are financially heavy. I think they hold like 30% in the actual ETF in financials, which has TD Canada Trust, which is where I'm down right now in my financials. But again, the diversification within an ETF just cannot be beat, right? So I personally, even though I overlap with TD Canada Trust because I hold it obviously in VDY, and it's also in my XEQT ETF. Like I said, I do have TD. I wanted to kind of over provision myself a little bit on TD. I feel like the long term, again, the 20 years, it's going to be a really good one. But again, diversification. You got to diversify. It is so important. Okay. So like I said, they're my big gainers, and then I have my one loser that's not doing so good. So just kind of to recap my annual dividends, which I'm hoping to get to $1,000 this year. But yeah, right now we're at $853. with my on-cost base at 3.1%. So again, it's just kind of the average, right? Like, or sorry, the balance, right? Like I have growth and I have dividends within my portfolio, which is kind of what my goal is. I don't want to be just like dividend focused. I want that capital growth as well. I am young. I don't need to live off the dividends right now. But like I said, I do like the dividends for reinvestment wise. If I want to, move the money to a different individual stock or ETF, it's just kind of nice to be able to reassess your portfolio without actually having to put additional money into it. So that's kind of cool. One thing I do want to highlight, and I don't think I've shared yet on this portfolio, this series, and that's specifically my my RSP. That I don't contribute to it regularly. I obviously do my bi-weekly contributions to my TFSA, but I do have money going into RSPs, but it's actually through a work program. So I actually invest bi-weekly through the work program. And then every time it hits $5,000 through the work program, I can transfer it to Wealthsimple at no fees. So we will be transferring that hopefully, I'm going to say probably another 4 or 5 months, we'll be able to accumulate that $5,000, and I will be transferring it into my RSP, where I will be kind of, buying $5,000 worth of stocks at that very moment. So I just kind of wanted to share that, and that will be happening later this year. So I'm pretty excited about that. I also have another locked account, which is a Lira, and I was kind of thinking about maybe moving it over to Questrade. Specifically because Wealthsimple doesn't do managed Lira accounts. So let me know if you guys are interested in also seeing that. I can maybe do a video on the actual transfer process. Maybe you guys would like to see that. Definitely let me know. But yeah, that's just a little bit of update on how the RSPs are kind of working in my life. So hopefully it's not too confusing. So just some quick highlights as well on just kind of what happened this week. So obviously the Bank of Canada did remain strong on their 4.5%. I just kind of wanted to highlight, if looking back 25 years, we are kind of in around that 2008 stock market crash levels, but we're nowhere near what they have been, in the past. So, hopefully it doesn't go much higher. They are kind of pausing right now. So, I think the markets just kind of took it as a positive because the markets kind of rallied up this week. But yeah, we'll kind of wait and see. We'll play it out. Another thing is the United States did release their month-over-month inflation rate, which was 0.1%, which I think was a positive in my mind, and the markets kind of reacted in that way as well. You can definitely see how things are kind of slowing down, which is obviously an important thing, as well as their year over year is on a steady downtrend as well. So 6%, from last month, now 5% this month, so on and so forth. So to just kind of finish up this update here, I just kind of want to highlight that next week on Tuesday, April the 18th, Canada will be releasing their month over month and year after year inflation rates. So we'll definitely have to wait and see how that reacts for the market. But that's kind of the biggest thing there. So like always, I hope this was helpful, guys. Definitely leave any comments below if you have any questions, and be sure to check out the next one. We'll see you guys later.